You cannot get a panel as big and as better than this. We've got Swaminathan Aiyar, the consulting editor of ET now, and we begin the discussion right away with him. Swami, the big question is, and we've got Uday Kotak, we've got Arvind Mayaram live, the Department of Economic Affairs Secretary, KV Kamath, and of course, Vaisi Deveshwar. Swami, the big question, when we went into the budget speech, you said it's a good time to be a bull. You still agree with that?
Short term, I've obviously been proved wrong. Long term, I still believe I'm right. I mean, I would say this is a cool budget at a time when finance ministers are normally suffering from election fever. No sign of delirium. It's very easy to forget that this is an election year. It's very easy to forget that there was a strong expectation among lots of people that there has to be something equivalent of the farm loan waiver. That, Congress is in a desperate position politically and it has to pull several large rabbits out of the hat and throw these freebies around. The fact that that has not happened, I find, is somehow being ignored. Everybody is treating it as though, this is some kind of kick-starting budget and he hasn't done that amount of kick-starting. I would say it is an astonishing feat to have produced the fiscal consolidation along with 29% increase in planned spending in these kind of conditions. Caveat, many of the revenue projections are looking very optimistic. It appears he's talking about a 19% increase in tax revenue at a time when nominal GDP growth according to the budget is going to be up only 13.4%. I have one further question. The budget says nominal growth 13.4%. But if GDP growth is 6.5%, it means he's projecting inflation of 7%. Isn't that much too high? I mean, would that not constitute some kind of failure of the whole strategy?
Right. I want to get Uday Kotak in on this as well. Uday, you were also pretty optimistic on the budget soon after the FM speech when you joined us right here on ET now. Do you agree with Swami on the assessment that it's a good feat that he's managed to keep the fisc in shape? If that's the case, then what explains the reaction that we saw in markets today?
I take this opportunity to compliment the finance minister and the entire finance ministry team for producing a responsible and a realistic budget at times like these. And it is a huge credit for keeping this head on shoulders and discipline. The question about markets short term is that markets have tended to need steroids from time to time on the budget day. And this budget is focusing on long-term good medicine rather than short-term shots and steroids. And that is what the market always tries to expect. And I think it is unreasonable to have these steroids when we are building long-term fiscal consolidation. And I am actually quite pleased with the way the whole structure of the budget has come out, particularly rural expenditure, which is continuing to be done. Second, mass housing and the incentives given for mass housing. Third, the whole area of increasing financial savings and getting focus so that we move away from Indian investors' appetite for gold. Therefore, there is a well thought through plan which has been put into action. And that is extremely good as I see it. It is realistic. Do not expect blowout wonders overnight, but a steady batting on a difficult pitch.
Right. There's cricket and there's a whole lot of pharma that Mr. Uday Kotak wants to talk about. He doesn't want steroids, he wants long-term medicine, and a whole lot of congratulation pouring in as well. Let's get in Arvind Mayaram into this discussion. 4.5% is the Q3 GDP that has been reported just today after the budget was announced. You still believe 6.5% is achievable? And as Swami is pointing out here, some of the revenue projections look rather very, very optimistic.
What we have said in the economic survey, and then later Finance Minister also said today, the growth projection is anywhere between 6.1 to 6.7%. This wide range also is because we live in uncertain times, but we are certainly looking at something which is more than 6.1% and could go up to 6.7%. Now, if you consider that to be the growth, then I do not see why we should have skepticism about the other factors, including the revenue buoyancy. If you look at present context where you are saying 4.5, I'm saying it is Q3, let us wait for Q4. And if you look at the past 5 or 7 years, I haven't gone beyond that, you would see that the final estimates of GDP growth have always been better than the advanced estimates. So we do not have any reason to be pessimistic this year. We believe that the final GDP numbers would be better than the estimates that we are getting now. And they would be, I still believe they would be somewhere close to 5.5%. It could be 5.4, it could be 5.5%. Now, if we take that as the number, then in current year, if you look at the revenue buoyancy, it has been somewhere close to 16%, 16 point some percent. And if we are going to have a higher growth next year, why should we doubt that we should go up to 18%? Now, the additional 1.5% that you're seeing is coming from additional revenue measures. As far as we are concerned, the numbers have been done very carefully and they are very credible numbers, and there is no reason not to believe those numbers.
All right, let's get the industry view as well. YC Deveshwar, chairman of ITC, joins in as well from Kolkata. Mr. Deveshwar, the point that Mr. Mayaram was making, that there's no reason to be pessimistic about growth in FY14, but the budget math is based on assumption that the economy will grow at 6% plus. I know Uday Kotak in the panel doesn't quite agree with such an optimistic projection. What's your sense? Do you think we can do 6% plus at a time when Q3 GDP is as low as 4.5%?
See, the issue basically is in revival of the investment sentiment. I agree that the challenge before the economy, before all of us, is very substantial. I agree also that the GDP figures as of now, by themselves won't inspire confidence. But if you look at the 360 degrees interventions that he has made selectively, touching all segments of the economy, I would say that people would begin to look up and begin to invest in the Indian economy.
Yes. Mr. Mayaram, if I may come in with one question. Your budget papers say that they are projecting a nominal GDP growth of 13.4% for the next financial year. Now, if you are going to have real GDP growth of about something like 6.5%, that is implying an inflation rate of 7%. So very far from bringing inflation down, I mean from the last time we had a reading about 6.5%, this is suggesting that things might even get worse. I am very puzzled by this because the aim of the fiscal consolidation, I thought, was to reduce the inflation rate even further. This is why we get to the issue of projections, that we already seem to have an assumption of 13.4%, as a result of which we are getting this 19% growth of revenue. Now, if that inflation rate is really going to be much less, then...
some problem with the audio.
Oh, sorry. Let me briefly repeat.
There's no sound.
The budget papers say you are projecting nominal GDP growth of 13.4% for next year.
Swami, I think we're trying to get that link with Mr. Mayaram fixed in just a moment. We'll get that question going the moment that link is solved. But I want to get Mr. Kamath into the discussion as well. Mr. Kamath, the big picture, do you think this budget has done enough to kickstart the economy? Mr. Kotak agrees, he thinks it has. YC Deveshwar is also equally optimistic. What's your sense?
What I saw so far of our industrialist was that everything was on the back burner. I think they are now reaching out to that back burner to try to see whether they can move things to the front burner. If industrialists don't do it after this budget, I think their animal spirits they might have to relook at. So yes, I would think that this is a budget which says that we are still in calm waters, we are still one of the best performing economies, and you need to now take a look at investing. And I think this signal the industrialists will take.